Hello, fellow rebel capitalists. Hope you are well. There is an AI black swan that I don't think anybody is talking about. It has nothing to do with AI taking over jobs. I think that's where everyone's focused, but I think they could be focused on the wrong thing because we all hear about these huge data centers that are going in and them taking as much electricity as the city of Denver, something like that. But I don't really think people have thought that through. And I just had an incredible discussion with my good buddy, Chris Martenson. That interview will go up on the Rebel Capitalist Interviews channel this evening. And we did really a deep dive into the resources required to feed the giant, the exponential giant that is AI, and how is that going to impact your standard of living? And how is that going to impact the economy? Because at the end of the day, energy is the economy. You guys know that well. So let's dive into this. I don't want to scare people with this. It's not something to lose sleep over, but we don't want to whistle past the graveyard. We want to be thinking about this in terms of what could it do to our standard of living? And then also, how do we position our portfolio? So first and foremost, let's go over to, well, I was going to show you the video, but we'll hold off on that because we haven't done a thumbnail or title for it. But let's go right here. So this is a chart of global energy consumption 1830 to 2010. Now, if we had one going to 2025, you would see pretty much the exact same trajectory. You would see a bump in the road there during the GFC, which you probably see right about in here, barely see it. And then you'd see the same thing during the cerveza sickness. But bottom line is this trend, obviously, what we would call exponential. So now, and also what's very interesting is the components that make up global energy use or consumption. We've got solar, wind, biomass, basically cow dung and wood, hydro, nuclear, nat gas, oil, and coal. So everybody thinks that we're transitioning into this new economy where we're not using as many fossil fuels. And that is complete nonsense. That's all narrative, has no basis in reality. Because when we see this chart, we can see, yes, we absolutely are using more solar. We're using more, well, barely. I mean, it's on there, but it's tough to see. We're definitely using more hydro. We're using slightly more nuclear. I would be interested to see a more modern chart. But the bottom line here is all these nasty fossil fuels that we hate so much and that we're transitioning away from. We're not transitioning away from. So you see, every single time we have a new source of energy, that just adds to the energy we have available to us. We don't use less of the former source. So when we go from coal to oil, do we use less coal? No. We just use more energy. Then we go from oil to nat gas. Do we use less oil? No. It just gives us access to more energy. So you say, George, who cares? So what? Why does this make a difference? Because oil or energy is the economy and energy is the standard of living, and the standard of living is the population. So check this out. We go over to a chart of global population, and you can see it is literally identical to the chart of energy. The chart of energy, you can just go back to that really quick, starts going exponential or straight up right around 1950. And when we look at the chart of the population, wouldn't you know it, the exact same thing. And what do you think a chart looks like of global GDP? Oh, you guessed it. The exact same thing. Look what happens in 1950, 1960, 1970, straight up. So the punchline is we have to have energy to sustain our standard of living or increase it. And we have to have energy to sustain or increase the population. If we have less energy, or should I say access to less energy, guess what happens? Well, two things. Standard of living, GDP, economic output goes down. And what do you think happens to the population? It goes down as well. This is one of the reasons why the Malthusian cult, otherwise known as the World Economic Forum, is so Malthusian. And they're so adamant about not only people using less energy, but let's be honest, they're adamant about lowering or reducing the population. They don't want all the plebs out there consuming all of their glorious energy. So if you're ever wondering why they're so anti-energy, it's because they're anti-human. And just like the guy in the, what was it? What was his name? Thanos in those movies. It's just like Thanos at the end of the movie, how he was basically a Malthusian. He was a movie representation of Klaus Schwab. And I'm not joking. Just look at what Thanos says in that movie, where he had all the gemstones or whatever it was called. And he said that there's just too many people in the universe and there's not enough resources. So we just have to eliminate half the people in the universe, and then we balance things out. And this is the exact same approach the World Economic Forum takes. They just are a little more covert about it. But if you read between the lines, it's right there. So anyway, because they're looking at these charts and they're saying, okay, well, we have scarce resources and we want to allocate more of the resources to us, and therefore we have to have less resources going to them, but it would be a whole hell of a lot easier if there was just less of them. That's the simplest way I can put it. But let's take this back to artificial intelligence, because we know right now, let's go over to this. I don't want to get too into the weeds here, but you guys you're not living under a rock. You know that AI is really important for obvious reasons, I think rightfully so, for the administration. And I don't think this is going to be exclusive to the Trump administration. I think whoever comes after Trump is going to have the same level of emphasis for artificial intelligence, to the point where I think it'll be deemed a national security issue. In other words, if we aren't at the forefront of artificial intelligence, this is risking national security. Okay. So we have the private sector that wants to gravitate as much as possible to artificial intelligence, lowers their headcount, reduces the amount of employees they have. This is why you see Microsoft going out and buying, what was it, 3 Mile Island? And you see all of these big tech companies investing in nuclear. Why? Because they can see the writing on the wall. They can see that the demand for AI is going to go exponential. That's in the private sector. But demand for AI in the prioritization of AI is also going to be there in the public sector, top down, from a federal standpoint, regardless of the administration. I think the AI genie, so to speak, is out of the bottle, and you ain't getting her back in. Whether we like it or not, this is the direction the world's going. So let's think that through. Assuming that there's going to be massive demand from the private sector, which I don't think any of you would argue with, and assuming the administration and the next administration are going to deem artificial intelligence a national security issue, what does that mean for this chart? You see where I'm going with this? AI takes a massive, epic amount of galactic, I'm trying to think of bigger words, amount of energy. And this energy, can it continue to go exponential? Maybe, but not at today's prices. And you see, I don't want to let the cat out of the bag here, but this is where we get into portfolio construction. Because the demands for energy are going to continue to go straight up. That's especially with AI. Because even without AI, even with just normal population growth globally, and just let's just say emerging markets continuing to grow, even if domestic economies or not domestic economies, excuse me, even if developed economies are stagnant, you still have Africa growing, Asia growing, South America growing. You still have all, the other 4 billion people or maybe more in that are in the developed world, and they want to improve their standard of living, which includes or requires this stuff right here. So you have demand coming from all these different directions. Now, I'm not talking about the next 6 months. We could get a air pocket, let's say, in the global economy where we get a recession, and yes, you could see demand going down. I think that's kind of what's driving prices right now of oil. But if we zoom out and try to think about the next 10 years, this is inevitable, guys. And that's without AI. This line would continue to go up without AI. But if we're just looking at this line as a proxy for demand. But with AI, this line goes straight up. So at a certain point, you have to ask the question, even with the latest technology, and assuming that we have the supply of, let's just say, natural gas for all of the electricity that goes into AI. And we haven't even talked about the cooling with water, by the way. That's a huge component as well. But even if we have the supply, can we get it out of the ground fast enough to service the needs of these data centers that are probably going to occupy more land than the national parks within the next 3 years? Whether that's good or bad, it is what it is. So then now let's assume for a moment that demand does go exponential because of everything that we're talking about. And even if we do have the supply, we just can't get it out of the ground fast enough, because it's not like you can just dig a copper mine in 2 days. And that's regarding the grid. It's not like you can just, immediately turn on the spigots for nuclear or even for nat gas. And let's keep in mind that Trump just did a deal. Trump just did a deal with now this isn't it, but maybe I can pull that up. But you guys heard in the news that he did this big deal with the EU. Well, what was one of the cornerstones of that deal? It's that the EU agreed to buy a ton of nat gas from the United States. Well, I don't know if I would do that. I mean, do we have a lot of nat gas? We absolutely do. But it's not like our supply is going to stay constant. Or excuse me, our demand is going to go exponential, most likely. So if we're shipping off all of the LNG or nat gas, whatever, and that is energy that we could use for our domestic economy, then that could put us into a position very soon, within maybe the next 3 years, where you got to make a choice. And this is where I'm going with the video. You have to make a choice as a society. Do you want to allocate the energy that you have available to AI? Or do you want to allocate it to humans? Because we might not be able to do both. And if we see AI prioritized as a national security risk, then I think it's very realistic in the next 3 years that your government, the federal government or your local government, could be saying, hey, guess what? You've got to do your patriotic duty. You've got to consume less energy. In other words, you've got to lower your standard of living. And oh, by the way, in the summer, you're not going to be able to turn on your AC. And oh, by the way, that water for your lawn, that ain't going to happen, because we need that to cool all the AI data centers. Or that vacation you were going to take, yeah, we're going to have to ration airline flight. Too much jet fuel. And oh, you wanted to use the internet in the afternoon? Yeah, that's not going to happen, because we need to have these pre-scheduled rolling blackouts or brownouts or whatever you want to call them. Because it's this tug of war, right? That in order for AI to run it all on all 8 cylinders, you need to take from the energy that was being allocated to those humans to maintain and to increase their standard of living. And not just increase their standard of living, but to increase the amount of humans, period. Because even if we have more energy, if we have less energy being allocated to humans, you're going to have fewer humans. Bottom line. So I think this is a very high probability. There are no certainties. There are only probabilities. And I think after talking to Chris Martenson, and then I actually spoke to Rick Rule about this today as well, I think there is a way out. Number one, I would love it if we didn't send any nat gas, although we're flushed with it right now. I still would rather keep a reserve of that as opposed to sending it to Europe. And another thing on the topic of energy and AI and kind of this doom loop or this decision-making process that we might have to make very quickly as a society. Chris was talking about how China has increased their energy capacity just massively since 2005, where ours is pretty much the exact same. And they're continuing to buy as much energy as they can or secure the rights to energy outside of China. So as an example, right here in Colombia, the Chinese built a very cool tunnel that goes from Medellin straight to the airport. So it reduces the time that you have to travel from 45 minutes maybe down to 20. Well, what did the Chinese get in return? I'm sure they got rights to a lot of the Colombian oil. So what did the Chinese just do right there? They traded fiat currency for energy. Pretty good trade, right? But what are we doing? We're doing the opposite. We're trading energy for fiat currency. Maybe not a good idea. Maybe not a good idea. It's very limited thinking. It's very short-term thinking. But I think although Rick and Chris come to different conclusions, the one thing we can all agree on is this is as close to inevitable as you can get. Because I don't see society just deciding to use less of AI, even if it's making, as it makes their life more efficient and more convenient. I don't see them choosing to use less just for the greater good. And I don't see the administration or the next administration not prioritizing AI and just saying, that AI thing, it's no big deal. China can get ahead of us. Europe can get ahead of us. Germany can get ahead of us. Japan can get ahead of us. But we'll go ahead and just let that be because we need to allocate the energy that we have to our citizens. They need to be priority number one. We need to put them first. I don't think that's going to happen. I think that's very, very low priority. Or excuse me, very, very low probability. So what happens in the interim? Well, what happens over the short run, most likely, is prices go up. And now this is likely after we have a recession, assuming that we do. Because if we have a recession, that's going to destroy enough demand for prices to at least flatline, and I would assume they would come down. But after that, once you come out the other side, these supply-demand dynamics are in place, and they ain't going anywhere. So even if we do have the supply, even if that is your argument, we still can't get it out of the ground fast enough to service both the humans and the robots, or the humans and ChatGPT. So you've got one release valve there. And that release valve is price, my friend. It's price. Now, Chris is a little more pessimistic on the ability for higher prices to solve the problem. Rick is pretty optimistic, meaning that if he thinks if prices go, let's say oil to 200, that is going to incentivize enough oil companies to come out and figure out new ways to get oil out of the ground, or to use the oil, and I'm just using that as a proxy, or to use the oil that we do have more efficiently with AI, or more efficiently with the demand needs from the human beings. So I guess the question becomes, what do you do about it? Assuming that you are aware of this, and I'm just mentioning this in a video because I want to encourage you guys to start thinking about this, because I think this is going to be a big, big topic in the future. That yes, we've got AI. Yes, that's fantastic. Yes, we want to be the leader, but do we have the energy? And do we have to rob Peter to pay Paul here? And so, number one, think about it from a standpoint of your personal, how do you protect your family? How do you protect your standard of living? And then number two, I think you have to look at this in terms of your portfolio. Like, what do you do? Do you rush out there and just buy copper? I don't know. I mean, let's look at the price of copper right now. Because as smart rebel capitalists, we want to buy things when they're cheap and sell them when they're expensive. So if we look at a price chart of copper, I'm just using this as an example. I mean, let's go back look at this. I mean, is this cheap? I'd like to see it adjusted for inflation. But even adjusted for inflation, I don't think we would be at a level where I would consider it cheap. So do you buy it? This is the question, based just on the fundamentals. I mean, do you break that rule and buy something when it's higher or buy something when it's expensive, just expecting it to become more expensive? I don't know. I mean, there's an argument for both, right? And same thing with oil. I mean, right now, the good news about oil is it adjusted for inflation. It's not cheap yet, but it's getting close. It's getting close. I remember during the cerveza sickness, when it got below 30, it was cheap, but prices have increased. Now, I'm not talking about oil. I'm talking about in general, prices have increased substantially since then, as you guys know. So now I think that that number is probably around 40. So like 45, I think it gets really, really interesting. But at 62, you buy it. Especially if you believe, or your base case is that we have a recession. And I mean, look at treasury yields. Look at what they're doing. They're screaming recession. Look at non-farm payrolls. That's screaming recession, or at least economic contraction, economic slowdown. And that ain't going to be good for oil. So you see, what this boils down to is, and I really want to change your thinking about this. We talked about it on a prior video. I can't remember when it was, because most people's solution is they just kind of throw up their hands and they say, oh, well, there's nothing I can do. Boo hoo, woe is me. And so I'm just going to do what everyone else does, just because if I lose all my money, I don't care if everyone else is losing their money too. So I just want to be a part of the herd. And what does the herd do? Well, the herd just buys the S&P 500 and they just buy the dip. And that's what they do. And they want to sit there and rationalize as to why that's the best decision because Warren Buffett told them so. And they sit there and just, oh, buy the dip because the stock market always goes up, because that's what Dave Ramsey says. But if you guys watched my video the other day, you know that that's complete nonsense, complete and total nonsense. You look at the S&P 500 going back to, I mean, we can go several time periods, but in the 1940s, as an example, went down, and this is adjusted for inflation. 1970s, it went way down, and it went down in nominal terms. So think about that. If you're someone that believes, like, I don't know, we're doing this. I guess we're not doing the screen share here. Let me show that again, guys, because I don't think we had the screen share working there. Okay. There we go, right here. So this is in 1970s, and 1940s, it went down in real terms as well. It meaning the S&P 500. So if you believe the rest of the 2020s going to be inflationary, people think that the stock market is a good inflation hedge. Really? No, it's not. That's fake news. That's narrative, not reality. So are you going to go out there and just buy the S&P and sleep well at night? Are you just going to join the herd? My suggestion would be no, that's probably a bad idea. So really, you're only left with 3 levers in your portfolio that are actionable, that you can use to not only protect yourself, but hopefully thrive in this insane world of, my guess is going to be scarce energy. We might have access to it. We might have, we might have a ton of supply, but demand is going to be going up so quickly that I don't think we've got time to dig it out of the ground that fast. It's going to take time and much, much higher prices. So in this world, I think there's really 3 levers you can pull, because you definitely don't want to do the buy and dip. That's ain't going to happen. And you don't want to be all in with gold or Bitcoin. I know a lot of people just 100% of their portfolios in precious metals. I don't think that's a good idea either, although I think they're a good play and everyone should own gold. It's too much risk. It's just too much risk, right? So with the levers in the portfolio, you've got I'm going to make smarter bets and my win rate's going to be higher, or I'm going to make asymmetric bets, or I'm going to make more of them. And more of them, that's probably not realistic for the retail investor. So you're left with 2 things: just making smarter bets that have a higher percentage of winning, and probably more importantly, making asymmetric bets, which boils down to not just picking the right stock or picking the right asset, but knowing when to buy. And most importantly, and least understood, when to sell. When to sell. So that's what I'm going to be focusing on a little bit more in over the next few weeks, because I think it's extremely, extremely important for people to not only think about what to buy, think about the global macro, think about the energy, think about the AI, think about all the things that we talk about on this channel, but also think about when to sell and when to buy, and portfolio construction. So if you want a little more help on that in the interim, if you want to deep dive on that, you can check out Rebel Capitalist Pro. This is what we talk about all the time. This is the investment website I have with Lynn Alden, Chris McIntosh, Brent Johnson, Patrick Stresna, Jason Hartman, etc., where we're really kind of doing this with the Rebel Capitalist Pro members, helping them set up the portfolio, mentorship, going over picks, going over, exit strategies, when to buy, when to sell, and really how to protect yourself in this crazy world that we're living in. You can do that if you want, but the bottom line here is you have to be cognizant of this stuff, and especially when it comes to energy. Energy is the economy. I would strongly encourage you guys checking out that video. It'll be live tonight here in about 45 minutes with Chris Martinson. And, get down, take some notes, look at the charts that we're going over, and think this stuff through. Think about how on earth, where are we going to come up with all the energy at the current price to satisfy the demands of the humans and the robots? And I think you'll come to a very similar conclusion that I come to with Chris and I come to with Rick. And that's the release valve is going to be number go up. So you got to be prepared for that. All right, on that bombshell, guys, enjoy the rest of your afternoon, evening. Make sure you're standing up for freedom, liberty, free market capitalism, and we'll see you in the next video.